This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, emerging market stocks climbed today following comments from the US Fed downplaying the possibility of early policy tightening. MSCI's index of emerging market stocks surged 1.5% on the day and was set for its best day in more than 2 weeks. South Africa's JSE was also firmer, boosted by gold shares. Gold stocks soared today, driven by a firmer bullion price, which hit a 3.5-month high. Now, Harmony Gold was up 10.13%, and Goldfields was up 5.44% on the day. In Kenya, the NSE All Share has shed almost $700 million in the past 7 sessions on the back of profit-taking and portfolio rebalancing. That's according to traders. That, of course, is after weeks of price rallies on positive investment sentiments. Now, here's a look at what else is coming up on today's show. French President Emmanuel Macron calls for more investment in Africa. Ethiopia cancelled 27 mining licenses. And raw earth bricks make a comeback in construction in Senegal. Well, let's start off today's show in France, where President Emmanuel Macron is now calling for more investment in Africa. France has been hosting several African leaders in Paris for a summit to discuss financial support to help African nations recover from the COVID-19 pandemic. Now, while addressing delegates, President Macron also called for good governance on the continent, and he pushed for what he called a new deal for African economies. More than a dozen African nations and representatives, including from the World Bank, the IMF, and the Paris Club, attended the meeting.
Africa has all it takes to succeed. It has the youth, a productive force, and the ability to take on challenges such as the climate and food emergencies in particular. If we, collectively, decide to propose a new deal, it is that first stone that we wish to lay during this Paris summit.
We are gathered here to reverse what has developed as a very dangerous divergence between advanced economies and developing countries, especially Africa. We have to go back to the strong development Africa had before COVID, for Africa and for the rest of the world. Africa this year is expected to grow only 3.2%. The rest of the world, 6%. We have to boost growth, public and private investments in Africa. And we can do that by mobilizing financing from international organizations, from bilateral donors, and of course from the countries themselves.
We should see, when it comes to Africa, how we could, at the level of regional economic communities, propose a sort of financial safety net that could allow us to face crises of that kind.
Now, on Monday, France announced that it's in favor of cancelling almost $5 billion of debt owed by Sudan as part of efforts to help the country in its transition to democracy. Here's Ross Cullen reporting.
Sudan is seeking relief on at least $50 billion of external debt. It's already secured bridge loans from the United States and the United Kingdom, and it now has further aid from France, which is Sudan's second biggest bilateral creditor after Kuwait. Sudan's economy was crippled for decades by sanctions imposed on former President Omar al-Bashir and his government.
As far as France is concerned, I want to tell you right now, Mr. President, Mr. Prime Minister, we are in favour of a pure and simple cancellation of Sudan's debt, of cancelling almost $5 billion. That is the meaning of our support for your transition. And it's the meaning of our commitment to the youth of Sudan who made your revolution.
The summit that was hosted by the French leader convened voices from across Sudanese society, as well as Sudan's neighbours like Egypt and Ethiopia, along with international organisations to try to spur investment in the country and aid its transition. Now, that political transition got underway after a popular uprising saw the military overthrow al-Bashir, who'd been president for 30 years. Sudan's Prime Minister hailed his country's return to the international community after 3 decades of isolation.
Today, with your leadership and generous support on this, we are able to create this last hurdle, which would signal the return of Sudan to the development community. And this is where we will be able to create the jobs that will respond to the aspiration of the young people.
The conference also heard from Sudanese youth, climate and feminist activists. Many of them participated in the 2019 protests, which focused initially against rising living costs, but quickly widened into demands for the removal of President Bashir and his government. Sudan is currently being led by a joint civilian-military council as it moves towards democracy, with elections set to take place by 2022. Omar al-Bashir came to power in 1989 in a military coup, and he was ousted the same way in 2019. He could still face trial on charges of war crimes and genocide at the International Criminal Court. Ross Cullen, CGTN, Paris.
Well, let's now take apart today's discussions further. We're joined by Professor Patrick Bond. He's a professor at the University of Western Cape School of Government. Great to have you with us on the show today, Professor. Now, as we just mentioned, at Monday's summit, France pretty much offered to facilitate the clearing of Sudan's arrears to the IMF through that $1.5 billion bridge loan. It also kicked off talks on broader debt relief for Sudan going forward. Now, in light of this, how effective do you think this meeting has been and will be in addressing debt relief and, of course, providing the much-needed capital and financing that Africa needs?
Well, in some ways, what Sudan's deal is debt cancellation. And I think that's incredibly important as a step forward from discussions over the last year that have been bogged down about debt relief, about marginal changes at a time a sort of force majeure, a major change occurred, much of the debt being odious, and it's very difficult to pay. Many African countries either defaulting or close to default. So this is an important moment. And look, Emmanuel Macron, compared to predecessors, Hollande and Sarkozy, is seen as more dynamic and trying to get France's reach less paternalistic, Franc-Afrique, into the Francophone section, and as the Sudan deal suggests, moving elsewhere. Look, the main thing on the investment side is France is still reliant for its inflows from Africa, the profits, largely on fossil fuels, and one company especially, Total. And that will be a problem. In northern Mozambique, Total's had to withdraw because of the insurgency there, and there's big debates here in South Africa, in the Western Cape, about whether Total really is going to do its offshore gas deal. So it's a very mixed picture, but France is looking a little bit better than it has in the past, at a time when Germany has been vetoing the vaccine intellectual property waiver, a very important problem for Merkel, and of course in Britain, no longer in Europe. Boris Johnson has a very different reputation on the continent, one of racism.
Well, yeah, quite right. It's certainly a change in tone from France. But going back to what African leaders are looking for at this summit, they pretty much want a moratorium, at least they say they want a moratorium on the service of all external debt until the end of this pandemic, not just the service of public debt. They also want better conditions to access financing. By that they mean longer maturities, lower rates going forward. What are your thoughts on the likelihood, despite the change in tone, that we'll see this happening after this summit?
Well, indeed, remember that there was a debt relief in 2005 and 6 that the G7, the biggest countries with the multilaterals, the IMF and the World Bank, that they'd organized, taking sub-Saharan Africa's debt for the lowest income countries from 200 billion down to 130, so it was manageable. Now we're well over 400 billion. Some of the debt is new to China, but the big debate is whether this pandemic will continue to cripple much of what Africa has been trying to do, which is industrialize, balance instead of just export of commodity prices. And the difficult case that Africans will make is that they deserve the debt relief. In the case of, say, Mozambique, because of the corruption in some of the debt from the Mozambican government, as well as a Swiss bank and a Russian bank. But there is much of the corruption and the odious debt to be factored in. But also commodity prices are beginning to boom. And in fact, there's talk of a commodity super cycle, which will benefit Africa. So this is going to be a strong case in coming weeks and months that Africa actually can't afford to pay over the period that, let's say, this pandemic continues for a year and a half. We're very slow to get vaccines. Only today in South Africa are vaccines beginning to move beyond health workers. And that means indeed economic stress for quite some time.
Now, of course, the IMF was a big part of all the conversations going on. World leaders, they've agreed to issue that $650 billion IMF special drawing rights. We'll see that directly pumping about $34 billion into African economies. Now, at the summit, we saw President Macron trying to persuade developed world leaders to consider reallocating a substantial part of their portions of that special drawing, of their special drawing rights to poorer nations. What's your take on his argument and the sort of support he's going to see from this?
Well, yes, look, Macron is doing what most of the advanced capitalist countries were trying to do just a year ago, and Donald Trump vetoed it, along with Narendra Modi from India, because of the India-Pakistan debate. But of course, Trump and his Treasury Secretary, Stephen Mnuchin, just didn't want the IMF to print more money. And this is a very interesting moment because we remember the last time, 2009, when there was a special drawing rights, the IMF printing its own currency in effect, giving the right, basically hard currency spending to the whole world. But as you point out, if it's 650 billion, Africa gets a small fraction, 34 billion. And Macron is correct to say, well, maybe given the inequalities in the world, the desperation on the continent of Africa, that should change. Here's the dilemma. Once that money starts being circulated, it's a special drawing right, it's a kind of a hard currency substitute, then the next question is, well, who's winning? And what we saw from 2009 to 2013, when this quantitative easing, printing of money from the northern banks, the US Fed, the British Central Bank and European Central Bank, the Japanese Bank, that really fueled financialization, and it didn't really trickle down. So will they make the same mistake again? That will be up to a more enlightened member of the G7, Emmanuel Macron. But he's still going to be up against the standard US neoliberal power structure, Germany in a more conservative mode, Britain very hard to predict, and massive crises like climate, the vaccine apartheid, and inequality, making this kind of an event for Africa important to take advantage of, because right now, the rest of the balance of forces is very much arrayed against the continent, so much so that it may be finally time for African leaders to say, well, we won't pay it, we can't pay it. And whether you give us SDRs or not, the system is rigged and we shouldn't pay it.
Quite interesting. Well, we do have to leave it there, Professor. Many thanks for your insights on the show today. That, of course, was Professor Patrick Bond from the University of the Western Cape School of Government. Meanwhile, business leaders in Senegal have welcomed the France-Africa Summit, which is discussing ways to support small and medium-sized businesses in Africa. Here's CGTN's Joy Kiruki Juma reporting.
Senegalese businesses are reeling from the economic impact of the COVID-19 pandemic. Among them is RNG Company, located in Dakar's Mamors district. The company specializes in the energy sector and employs more than 40 people. A manager with RNG views the France-Africa Summit as a boon for all African companies in difficulty.
I think it is the right time for the heads of state to go and discuss and take stock of the economic situation since March 2020 until now. They should discuss different points that could allow our companies to recover and gain competitiveness, because we have had a lot of trouble keeping our companies still in business. So we are asking for funding, assistance, coaching or follow-up after this summit. We are business leaders and we have employees that we have to pay in order for them to live decently. We hope that at the end of this summit, we can find some constructive solutions that will allow us to continue working, because we need to work. Work must not stop, and Africa needs to work.
Donc nous sommes des dirigeants.
With the devastating effects of COVID-19, Zainab Sangare, an economic analyst, insists African countries need massive long-term financing to recover and rebuild.
This France-Africa summit will allow companies in difficulty to rebound economically after this COVID-19 pandemic, because we are all witnesses of the damage of COVID-19 on Senegalese and African companies in particular. It must be admitted that many companies have been created in the digital field in Senegal in recent years. However, many of them have closed because they could not resist the effects of COVID-19. Today, Senegalese companies need special support more than ever. In order to rebound the companies, the national and international economy, it is necessary to collaborate and mutualize actions at this time. This is what is needed for everyone to see each other at the top of the economic curves.
According to the International Monetary Fund, Africa's financing needs are estimated at $400 billion. Many strategies to support the African continent are expected to be discussed at the summit. Among those to be explored include debt relief and cancellation. Joy Kiruki Juma, CGTN.
And now look at some corporate headlines today. Heineken is in talks about a takeover of South African wine and spirits maker Distell. Now discussions are still ongoing, though there's no certainty as to when or whether they'll lead to a transaction. Following the confirmation, the world's second largest brewer's shares advanced about 0.9% in Amsterdam. That's valuing the brewer at about $70 billion. Distell shares jumped as much as 10%, hitting an intraday record, giving the company a market capitalization of $2.4 billion. Meanwhile, the African Guarantee Fund has received a capital increase of $20 million from the Danish Investment Fund for Developing Nations. The money will be used to facilitate green financing for small and medium-sized enterprises in Africa. Now, SMEs on the continent have experienced a deterioration in their credit worthiness as a result of the economic impact of the pandemic. The Danish Investment Fund has now invested $72 million in the Africa Guarantee Fund. And leading German lender Commerzbank has posted a net profit of $162 million in the first quarter of this year. That's compared to a net loss of $355 million last year. The bank is in the middle of a major overhaul, shedding thousands of jobs and closing hundreds of branches. It plans to reduce the number of German branches from the previous 1,000 before the coronavirus outbreak to around 450 by the year 2023. And Amazon is in talks to acquire the iconic US movie studio MGM. That's according to a person familiar with the matter. However, it is possible that no deal may result from those talks. The movie studio behind the James Bond franchise and also owner of the Epix cable channel and maker of TV shows, including popular shows like The Handmaid's Tale, Fargo, Vikings, and Shark Tank, may be acquired soon. And that's a look at our corporate headlines. We'll be heading into a short break now, still coming up on the show. Ethiopia cancels 27 mining licenses. And we look at how much crop insurance can improve food security in Africa.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction action on ground. Joining us in Johannesburg is Sutra Nairobi. Hello, Nairobi.
This is how all stories begin. See how they end. Only on Global Business.
Welcome back. Now, Ethiopia has cancelled 27 mining licenses and sent a warning to 3 companies in a move by the government to spur production. Ethiopia now wants to earn better hard currency from the mining sector through strong policy direction and better partnerships with investors. From Addis Ababa, here's CGTN's Girum Chala.
The Ministry of Mines and Petroleum of Ethiopia had 97 registered mining companies working with it. From gold to petroleum to emerald and other precious stones, most are actively engaged in the sector. However, the ministry has just announced that 27 licenses have been revoked permanently as these companies were unable to enter into operation even though they have been supported and encouraged to do so based on the agreements they have signed with the government. According to Mines Minister Takala Uma, the license will be opened up to international tender soon enough. The minister emphasized the mining sector is assumed to be a leading sector when it comes to generating the much needed foreign currency for the nation. And over the last 10 months, the country has earned $514 million from the export of different minerals. The minister further said, through the work done over the past few months, gold is now a leading export commodity for Ethiopia, standing much higher than the traditional leading export of Ethiopia, coffee. Ethiopia has been pushing to develop its mineral and metal resource, citing mining as a key sector in its economic reform agenda. Grumchala CGTN, Addis Ababa, Ethiopia.
Meanwhile, Egypt has launched a mega agricultural project in the Delta region of the Western Desert to boost food security in the country. Now, authorities say the project will encompass industrial complexes based on agricultural production and create thousands of new jobs for the country. Now, CGTN's Yasser Hakim has more on that report from Cairo.
Most of Egypt's 100 million population is cramped on a fraction of the country, mainly the Delta and along the banks of the Nile, due to the desert-like conditions that make it inhabitable. The Mustaqbal Misr, or the future of Egypt, is part of a mega project dubbed the New Delta that seeks to change the country's agricultural fortunes. The total area being cultivated is 1 million fidans. It's meant to expand agricultural land and urban communities to the vacant northwestern desert area.
We are talking about 500,000 fedans in the first phase, where we cultivate crops suitable for the weather conditions there. We have cultivated 200,000 fedans with crops such as beets, sugar beets, different vegetables and wheat, which we import in large quantities. Our priority is to achieve self-sufficiency in basic food products. We have a growing population, and 60% of it are the youth, who increase consumption on an annual basis.
One challenge that Egypt has been facing is water scarcity. The North African state's government is establishing desalination and water recycling stations to irrigate the desert land. According to a cabinet statement, the Future of Egypt project will create more than 200,000 job opportunities and add value to the economy.
The agricultural sector is extremely important for Egypt. 57% of Egyptians benefit from agriculture. 15% of the labor force is in the agricultural sector. 20% of non-oil exports are agricultural products, and 25% of the GDP comes from agricultural sector. So giving it special attention is essential to achieving food security, increase national income, and raise economic growth rates. Having more supply will also push prices of food down.
Apart from private developers, the youth will be given small plots of land at subsidized prices to cultivate and live on it, thus creating new communities away from the congested Nile Delta. Yes, Hakim for CGTN, Cairo.
Well, let's move on now. Technology firm Microsoft is looking to pioneer artificial intelligence in Africa. The organization has graduated 200 engineers since launching its Africa Development Centers 2 years ago. Now, the organization is looking to develop at least 500 engineers in artificial intelligence across the continent by the end of 2023. Well, let's discuss the firm's progress on this project. We're joined by Jack Ngari, he's the head of the ADC site here in Kenya. Great to have you on the show with us, Jack. Now, of course, it's been about 2 years since you launched this project. Give us a sense of how many local engineers you've sort of trained so far. And of course, we're hearing that your teams of local engineers, they're already playing a major role in helping build global products. I'll point to two projects. One of them is Microsoft's new mixed reality platform, Microsoft Mesh, and of course, Microsoft's 365's Graph Explorer. Now, we don't know much about this, but give us some insight into how much progress that project has made. Well, it looks like we have lost Jack there. We'll certainly try and get him back in time. Now, the size of Tunisia's economy, or gross domestic product, shrank 3% in the first quarter of 2021 from a year ago. That's according to the country's statistics agency. The tourism-dependent economy has been battered by a plunge in arrivals and forex inflows due to the coronavirus pandemic, leading to hundreds of thousands of job losses. Here's CGTN's Adnan Shaushi with more from Tunis.
Economists in Tunisia say that this alarming decline in the growth rate is mainly due to the decline in the added value of the agriculture and fisheries sectors, which dropped by 6.7% at the end of March 2021. Agriculture is the lifeline of Tunisia's economy.
The data on agriculture and fisheries is terrifying. The decrease of 6.7% has never happened before over the last 4 years. Tunisia is preparing for the post-COVID recovery, but this will not happen without giving priority to agriculture, which is tied up to food security and the activity of the agri-food sector.
Analysts also warn that rising oil prices amid strong rebound in fuel demand on the international market pose a further risk to the country's economy. This follows the decision by the government not anticipating higher fuel prices while preparing Tunisia's 2021 state budget.
The government made a big mistake. The 2021 state budget was drafted on the basis of $45 for a barrel of crude oil. Now the price is over $65. It will soon reach $70. Tunisian population is paying for this difference with higher fuel prices. The state will also limit energy subsidies. This will cause the economy to shrink even further.
According to the monetary and financial indicators released by the Central Bank of Tunisia, tourism revenues edged down 55% during the first 4 months of 2021 compared to the same period in 2020. Tourism accounts for about 8% of Tunisia's GDP.
The pandemic has devastated the tourism sector. This vital industry cannot contribute to gross domestic product without an efficient vaccination campaign. Tourists are still hesitant to travel. Tourism revenues will not increase without an improved health situation domestically and globally.
The mining sector's added value fell by 31% due to the decrease in the production of raw phosphate. Meanwhile, the added value of non-manufacturing industries rose by 11.5% in the first quarter of 2021, thanks to the increase in the added value of the oil and natural gas extraction sector by 26.1% and construction by 10.4%. According to the National Institute of Statistics, the Tunisian economy recorded an unprecedented decline of 8.8% in growth in 2020 compared to 2019. The GDP also fell by 6.1% in the fourth quarter of last year compared to the same period in 2019. Adnan Shawishi, CGTN, Tunis.
You're watching Global Business Africa. Let's take a short break now, but still coming up on the show. The European Union adopts a plan for a unified corporate tax regime. And the world will breathe if we just stopped wasting food. We'll tell you how.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
And now here's a quick recap of other headlines this hour. Morocco is recalling its ambassador from Spain for what Morocco is calling consultations as diplomatic tensions escalate. Now, migrants from Morocco have continued to arrive at the Spanish enclave of Ceuta, despite Spain increasing its military presence at the border. This is the second day of record arrivals as thousands make their way onto European soil through the enclave. And Egypt's parliament may soon discuss a draft law that aims to rid the country's governmental bodies of employees affiliated with the Muslim Brotherhood. The draft suggests a temporary suspension of anyone suspected of belonging to the organization that Egypt lists as a terror group. And a committee formed by Tanzanian President Samia Suluhu Hassan to evaluate the impact of the coronavirus pandemic has advised the government to look into importing WHO-listed COVID-19 vaccines. Now, the committee came up with 19 suggestions to tackle the spread of COVID-19 virus in the country. And finally, the Red Cross War Memorial Children's Hospital in South Africa is celebrating their latest surgical milestone, the separation of a rare set of conjoined twin baby girls. The twins, Sifo Setu and Amale Talisi, were born attached at the head. And that's a recap of some of today's top headlines. And to some international news now. The European Union's executive have adopted a plan for a unified corporate tax regime. The EU says this will add to economic growth and help create a fairer and more sustainable society. Now, European Commission Vice President Valdis Dombrovskis said the current corporate tax systems across the 27-member bloc does not reflect the long-term priorities such as green and digital transitions. The Commissioner said the EU was in need of tax revenue to recover from the COVID-19 pandemic, coupled with the tens of billions of euros lost each year to tax fraud.
Today's tax bases are changing, and our existing tax environment is no longer in line with our broader objectives and ambitions. It does not reflect the long-term priorities such as green and digital transitions. We also need taxation to support and sustain our recovery by creating an environment conducive to fair and sustainable growth and investment. We will take actions to ensure effective taxation by raising public transparencies on taxes paid by large economic players and by tackling the mixed use of shell companies for tax purposes. We will also promote investment and innovation by addressing the debt equity bias in corporate taxation by introducing a proposal of DEBRA, or Debt Equity Bias Reduction Allowance.
EU member states are losing tens of billions each year to tax fraud, evasion and avoidance. An estimated 50 billion euros per year to cross-border VAT fraud, 46 billion euros per year to international tax evasion by individuals, and between 35 and 70 billions
each year as a result of corporate tax avoidance in the EU. So this calls for action.
Well, let's move on now. Technology firm Microsoft is seeking to play a major role in boosting artificial intelligence in Africa, as well as mixed reality innovation and, of course, machine learning. Now, the organization has so far seen about 200 engineers pass through its Africa Development Center in the past 2 years. The organization is also looking to develop at least 500 engineers in artificial intelligence, amongst others, across the continent by the end of 2023. Well, let's discuss the progress this project has made so far. We're joined by Jack Ngare. He's the head of the ADC site here in Kenya. Great to have you on the show with us, Jack. Now, of course, 2 years after your launch, your teams of local engineers they're already playing a major role in helping build global products for the company. Take us through their participation in projects such as Microsoft's new mixed reality platform called Microsoft Mesh, and of course the Microsoft 365's Graph Explorer.
Great to be here. So this follows on the back of Microsoft launching the Africa Development Center. Microsoft tends to have development centers across the globe, in India, China, Israel, the US, Europe, etc. 2 years ago, we launched the Africa Development Center here in Nairobi and in Lagos, and where we shall be building Microsoft products that will service the globe. So just not local markets. And so on the back of that, 2 years since our launch, we are now sitting at 300 engineers plus in Nairobi and 70 engineers plus in Lagos, and doing all sorts of exciting global technology development work. As you rightly mentioned, artificial intelligence is one of the areas we're strongly looking at with the launch of the virtual environment known as Mesh for Microsoft. In Kenya, we have done quite a number of interesting projects, such as Microsoft Graph, which is just exposing Microsoft capabilities through APIs to the global community, so that businesses, developers, people who want to get services from Microsoft can be able to get it through this platform. So there's a lot of progress happening, quite a lot of exciting work that these engineers are working on. And it's a true testament of the kind of, not only talent that Africa has, but also the skill sets with such an investment by Microsoft.
Well, let's delve further into that, because the aim of this project was to seek out engineering talent from across Africa to fuel, of course, AI as well as others. What sort of progress have you made in developing that talent and creating locally relevant products?
Yeah, that's a great question. So, looking at it from a perspective of the median age in Africa sits at around 21. In places like Kenya, it's 19. In Nigeria, it's 20. It's such a youthful population. And the next phase of the Industrial Revolution is going to be technology. I mean, it's no longer be steam-powered factories or plants that manufacture cars. They are now all robotic and automated. And so, one of the things that Microsoft has been strongly advocating and spearheading in this part of the world is killing the talent that we know we have, the youthful talent that we have. We need to be equipped with the right kind of skills. And so part of the program is to work with universities and tertiary schools to make sure that we equip them with the right kind of developer engineering skill sets, so that they can be able to take up roles within Microsoft, and not only Microsoft, anyone else, whether it's Google or Twitter or anybody else. They have the right kind of skills. And so AI is just one of the fields that we're equipping a lot of the engineers in Africa with, but we're looking at other things in technology as well, whether it's artificial IoT, also known as Internet of Things, to automate a lot of things that are kind of manual right now. Those are all the things that we're looking at right now.
Now, of course, retaining the best engineering talent in Africa can't be an easy task, given the fact that we're still lagging behind the rest of the world in technology. So what are some of the challenges you faced in fulfilling this vision, and of course, how are you overcoming them?
Yeah, I mean, brain drain in Africa is a real thing. You find a lot of our talent, a lot of our skillful engineers are going to get jobs in Europe, are going to get jobs in the US. And so, that is a real challenge that we face as an African continent. Microsoft's investment in the African continent is to say that you don't need to leave Africa to get those kind of opportunities. I mean, speaking as as an engineer, back in my days, I had to leave to get the kind of exposure and experience that I needed to get, in terms of developing software and developing systems. But now that is changing with a lot of investments by Microsoft, and not only by Microsoft, by a lot of other companies. Recently there were announcements by similar organizations to invest in Ghana, in Egypt, in South Africa. So we are seeing a lot of these tech companies coming to invest in the skills and in talent in Africa and hiring them here. So you don't have to leave the African continent in order to develop your career.
Well, we'll certainly continue to keep an eye on the project. Many thanks for joining us on the show today, Jack. That, of course, was Jack Ngare. He's the head of the Microsoft's ADC site here in Kenya. Well, let's move on now. Leading a Chinese construction machinery manufacturer, Zhuzhou Group, has moved up to a historic third place on the Yellow Table 2021. Now, that's the ranking of the world's top 50 construction equipment manufacturers released by British publisher KHL Group. The top two rankings in the Yellow Tables are Caterpillar from the US and Komatsu of Japan. Now, XCMG's leading crane and excavator products are selling strongly in the international market, especially here in Africa. To embrace the digital age and better serve customers, XCMG has also promoted digital, intelligent, and unmanned machinery. The company exports to more than 187 nations and regions around the world. And heading to Portugal now, the country is welcoming back tourists for the first time in 3 months, but only to those from the European Union and the United Kingdom. Well, CGTN's Maya Alberti looks at how the news is a welcome relief in the country.
The sun is out and the tourists are in. Portugal is reopening its borders for the first time in more than 3 months, allowing the entry of tourists from the UK and the European Union. Visitors only need to present a negative COVID test. A much-needed relief for Silvina Rodrigues and her ice cream business, which she's had for more than 40 years.
Last year was terrible, but this is a relief for me and everyone else. At least we already see people in the streets again.
It's a sweet reward for tourism-reliant businesses like this one, who were shut down for months after Portugal suffered one of the world's worst COVID outbreaks in January. But once the government announced it was welcoming back tourists, bookings across the country exploded. This hotel in Lisbon, which was closed since February, is already seeing a 15-fold increase in demand from what they expected this time of year.
Because we needed vacation, it's locked down. It has been locked down in Switzerland in a certain way. Things are reopening now, but we wanted like a nice place to hang out outside, go to the beach, enjoy the sun and everything. So Lisbon is the perfect location for that.
New clients include Spain, Italy, and Scandinavian countries. However, important markets like the US and Brazil are still left out. But the government hopes the EU will open its external borders soon.
The United States was our fourth biggest market. Now it's eighth. Brazil was fifth. Now it's almost out of our top 10. We don't depend on these markets, but they're very important for us, and we are looking forward to these intergovernmental negotiations.
Numbers are going up, but there's still a long way to recovery.
Last year was catastrophic. It's like we went back 40 years. It will be difficult to compensate for last year's losses in 2021, but tourists are looking for beach destinations and contact with nature, and Portugal has a great advantage internationally.
While the tourists bask in the sun, the Portuguese government is already celebrating the economic recovery they brought with them. In the future, the government hopes it will be able to open its doors further into the world and give another sign of relief for this struggling sector. Mia Alberti, CGTN, in Lisbon.
Now, if every person in the UK stops wasting food for just a day, it would have the same effect on greenhouse gases as planting 500,000 trees. Now, food waste accounts for around 8% of carbon emissions, and at least some in the country are now eyeing the role anaerobic digestion plants could play. Here's Jemima Walker reporting.
The saying goes, one man's trash is another man's treasure. And that's certainly true here.
By sending food waste to anaerobic digestion, you're preventing it going into a landfill site. So in a landfill site, the food will break down and the gas will be released to atmosphere. We're sending it here, we capture the gas and turn it into energy that people can use.
Here, 34,000 tonnes of food waste a year gets collected from local schools, businesses and homes. It's then depackaged in the food waste reception hall, which is a lot less smelly than it looks. It then gets heated up to make sure diseases are killed.
What kind of things are you protecting against?
Potentially harmful pathogens and bacteria such as E. coli or Salmonella.
The waste sits for 55 days and then gas is taken off the top.
So it really is just like a huge stomach in many ways.
In many ways, exactly. You've got to give it the right diet. If you give it too much salty things, that can harm the bacteria.
This room checks that the gas being processed is pure methane before it gets injected into the national grid. The food process at this plant generates enough power to power 2,500 local homes for a year.
This is what's left.
If you have a smell, it's not too smelly.
No, it doesn't actually smell.
It can be used as fertiliser by local farmers who call it rocket fuel.
I mean, it's very effective. It's 7 days and you can see where it's been applied. It really picks up the crops. In terms of, like, compared to pre-oiled fertiliser, it's tenfold in the sort of effectiveness, I suppose, or the response that you see in the crop.
Anaerobic digesters are eye-wateringly expensive to run and rely heavily on government subsidies. So while anaerobic digestion is an effective and circular way of dealing with food waste, government has to keep putting its hands in its pockets to make sure trash can turn to treasure. Jemima Walker, CGTN, Cheltenham.
And on that note, let's take a look at commodity markets today. Now, as you look at that table, commodity prices certainly continue to rally broadly this year, as of course the global economy emerges from the pandemic and fires up a demand. Oil rose to hit $70 a barrel today for the first time since March. That's before moderating, of course, as expectations of demand recovery after the reopening of the European and US economies did offset some concerns over spreading coronavirus cases in Asia. Now, copper surged to an all-time high this month, breasting through that $10,000 a ton in the process. Gold also rose to the highest in more than 3 months, breaking out of a downtrend which it's held since August. And that's on growing inflation concerns and assurances on monetary policy. Well, let's take a short break now, still to come. Raw earth bricks make a comeback in construction in Senegal. We'll look at the entrepreneur behind it.
Africa is a continent of diversity, with varied climates and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
Tunis, Cairo,
Juba,
Johannesburg, Ethiopia,
Tanzania. Africa Live. Find your voice.
And heading to Nigeria now, the country's inflation has recorded a drop for the first time in more than 20 months, and that's despite the recent weakness in its currency. Now, data from the country's Bureau of Statistics shows inflation dipped marginally to 18.12% in April. Despite the drop, Nigerians are still feeling the pressure of price hikes caused by months of rising prices. Here's CGTN's Kelechi Mekalam with more on this from Abuja.
It's becoming increasingly difficult for trader Blessing Joshua to keep up with her foodstuff business. This is as prices of commodities continue to surge amid the double-digit inflation. Staple foods like beans, rice and cassava flour have increased by over 200% in the last 6 months. Like many others, Blessing has been contemplating closing shop due to low profits and patronage.
Change. Because it's not like this before. But now, even to get customer is a problem. Because people cannot afford that kind of money. When we enter market, before you see one customer, it will take you time. Because the money they have, I'm not sure they can buy things. So even when we sell, you know even see gain inside. So what can we do? We continue to sell.
But the pressure is transferred to customers who continue to bear the brunt of this hike. This despite their stagnated income.
When you go to the market to buy something, you find out that the way you buy it yesterday is not the same way today. Things are increasing.
You need to have a job. Even though the price is going, you have to somewhere to go. When you work, they pay you. But now there's no hope of where you go work.
Nigeria's inflation recorded its first decline in 21 months. The rate dropped to 18.12% in April from 18.17% recorded in March. Economic watchers say the decline is not significant enough for stakeholders to rest on efforts.
We are to look at how significant this this decline is compared to the level of hardship that Nigerians are experiencing. Then we can say it is nothing at all. It is to up the wage or the wages of workers, because as it stands, that is the only thing that can help them. And when that is done, we can now take a countermeasure to ensure that that rise in income or that rise in wages does not continue to aggravate the inflationary system. We need to see a situation where consumers have the power to begin to buy products on the market.
Food inflation dropped to 22.72% in April from 22.95% recorded in March. Several factors, including insecurity and the COVID-19 pandemic, have driven inflation since 2019. This decline may not have any significant impact on prices of commodities, but experts advise the government to continue to ramp up efforts to keep inflation rate down. Kelechi Mekalam, CGTN Abuja, Nigeria.
Now in Senegal, the construction sector is booming, while most owners of commercial buildings and homes go for normal cement blocks. And there's an innovative company that is opting for a different approach, bringing back the old raw earth architecture. And here is the story of Worofila and its push for the use of bioclimatic bricks made from compressed raw earth. Here's Nick Mudimba with the story.
Most of the unfinished buildings in the Senegalese capital Dakar form a uniform grey color of concrete, but one upcoming building stands out with its unique red bricks. The half-cut bricks that stick out of the walls is an intentional design. It allows for the walls to always be in the shade.
Given the sun that we have and the fact that we always want to isolate the facade from the sun, having the setbacks sort of gives the cantilever that kind of casts a shadow on the facade, sort of giving it, instead of having a really big cantilever on the roof, having sort of these intermediate ones gives the shade while creating a very unique aesthetic language that can only be achieved with bricks.
The bricks are earthen, made from locally available soil. It is an idea of Worofila, a construction company that is pushing for alternative construction approaches.
I think there's been a bit of a divergence from just very basic principles, which is orientation, using the materials that you have locally, only because, you know, they sort of respond better to the climate. You know, Earth has great inertia, and for sort of a hot and dry climate as we have here, and even for tropical climate, it works really well in regulating the temperature. It's readily available, and to produce it doesn't require any additional CO2 emissions. And it can also create local jobs and reinvigorate, I think, building traditional know-hows that have been lost for quite some time.
She says Senegal's traditional homes were made this way, using bricks made from raw earth. The need to conserve the environment is one of the reasons that drive the two investors. Unlike concrete, earth and bricks require almost no energy to produce.
Pour produire du ciment, on a besoin de calcaire.
To produce cement, you need limestone. This means that you need limestone pits. In Senegal, the baobab tree grows on limestone. So in order to meet the growing demand for cement, companies deforest classified baobab forests to extract the limestone.
On est obligé de les cimentiers.
Orofila also uses blocks of shredded and compressed taifa, a fast-growing invasive reed found in the Senegal River, which are placed between the floors for acoustic insulation.
Au-dessus de ces briquettes,
the alternative would have been to add plastic or polystyrene insulator. So we are always trying to source locally and organically in order to reach our goals.
This unique idea is slowly gaining traction amongst investors in the construction sector in Senegal. The company has so far been involved in several projects, including private homes, offices, and part of a train station. A local metal manufacturing company called Shula Metal has contracted Orofila to build its workshop and offices.
The choice is obvious because we can't afford to put off the decisions on the environment. So for us, first it is an ethical choice that is caring for the environment and also the money saving. What is really important for us is the well-being of the public, who are our partners.
For its efforts, Orofila has been nominated for an Ashden Award. This is a UK prize that highlights global climate solutions. The Orofila team hopes to win it and raise its visibility. Nick Mudimba, CGTN.
Well, before we leave you today, a quick look at Africa's currencies. A jump in commodity prices today saw South Africa's rand leading gains in emerging market currencies. It was up 0.6% despite some caution ahead of a local decision on interest rates due on a Thursday. And of course, consumer price growth figures expected before that, and that limited its gains today. Nigeria's naira strengthening on the day slightly against the US dollar at the importer and exporter window, as of course foreign exchange supply in the country plummeted significantly. However, the local unit remained pretty stable at the parallel market. And that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.